Hi everyone, welcome to the TimingResearch.com web show for March 30th, 2015. My name is David Kosmeter, I'm the creator of Timing Research, and today we are going to be discussing the 79th weekly report for Timing Research. If you haven't had a chance to look at this yet, go to TimingResearch.com and you can click on the reports button at the top and download this or any of the past reports there. So I have Dave Landry guest hosting for me again this week, so I'm going to go ahead and turn it over to him.
Okay, thank you, Dave Kosmeter, and thanks once again to you and TradingResearch.com for having me back on the show. I appreciate that. We have Derek Pilger of MagentaTrader.com. So a couple things, Derek. First of all, why Magenta Trader and not Cyan Trader or some other color? And tell us a little bit about yourself, your trading, and your website, MagentaTrader.com.
Yeah, this is about 5 years that I've done Magenta Trader. Before that, I was a sales coach for another software company called Best Choice, and I think a lot of people have heard of them. And there's a dozen software companies out there that do some type of seasonality. Even the trading platforms has it. What we've done is we've kind of focused our entire energy upon seasonality, and we have a dynamic seasonality. Most people do a 365-day seasonality where they look at March 15th on March 15th for the last 10 years. Unfortunately, sometimes March 15th is a weekend or a holiday. In order to get their system to work, to fill in the blanks, they do a simple 3-day moving average. Without getting into that too much, we decided to do dynamic seasonality. So every month, we look for some type of dynamic event that takes place that month. Like in November, if it's Black Friday. So we'll line up all Black Fridays in the month of November, and so everything else makes more sense. There might be a big Fed report or something that looks of interest. So what we've done is we've lined things up on dynamic seasonality. And what interests me is that you guys are trying to make some prognostications of what's going to take place in the next week in the market. Well, I do it exactly that, but I do it mathematically. And I'll elaborate into that later on. I'll look at the last 10 years and what has it done for this week mathematically. So does it go up? Yeah. Okay. We see Jim has joined the board. Go ahead, Dave.
Cool. Yeah, interesting stuff there, and I'm looking forward to learning a little bit more about that. Next up, we got Roy Swanson of SteadyTrader.com. Roy's a friend of the show. Roy, tell us a little bit about yourself to those of us who don't know you. Tell us a little bit about your trading, and tell us a little bit about SteadyTrader.com.
Yeah, hi Dave. Good to be back.
Good to see you.
Back on the show. I've been trading for since about mid-1980s. And in the 2000s, I got involved with the actual industry, consulting for a number of various trading strategy providers. I can't really say who because I still sometimes consult for them. But and then last year, a little bit before a year ago, I created my own trading system, my own algorithm, which is on SteadyTrader.com. It's called Greenlight Trades, and it's a basically, it's a very near-term, I call it very short-term trading system, 1 to 5 day holds based on a couple of proprietary algorithms. Anyway, the details of that service are on the website Steady Trader. So I'm very much a very short-term swing trading guy. Trades based on data.
Cool. Okay, yeah, I'm a big fan of the short term, which I'll explain in a minute. Next up, we have Roy Swanson. I'm sorry, Jim Kinney just came in. I'm sorry, Jim. Glad you could make it. Jim Kinney of OptionProfessor.com. Jim's a friend of the show. Also, Jim, tell us a little bit about your trading and tell us a little bit about OptionProfessor.com.
Sure. Well, as you know, I provide the content for the Option Professor, which means that they have 7 DVDs that they offer, starting out with the basics and going through all the different strategies, writing them for cash flow and income purposes, hedging against positions you might have, and basically different types of combination strategies like straddles, strangles, and then the spreads, debit, credit, calendar, ratio, etc. So lots to learn in options, as we all know, and this is a pretty balanced set of DVDs that we have over at Option Professor to help the guys try to find the strategy that might be suitable and appropriate for their circumstances. So we kind of knowledge first, trade later, that kind of thing.
Yeah, absolutely. Like I think I've said every show that you've been on, a lot of moving parts with options. So education is good stuff there. Okay, Derek, let's go to you first. Based on any technical or fundamental. Oh, I'm sorry. I'm Dave Landry. I think most of you may have known me from these shows. My website's DaveLandry.com. I believe that you could only predict the short term when it comes to markets. In my disclaimer, I have a long CFTC and SEC boilerplate disclaimer, and then when I give a presentation, I say, well, you can read all that, but basically all predictions are about the future, and a lot of stuff can happen between now and then. And so it's kind of like akin to predicting the weather. It's if it's cloudy and kind of thundering out, you know it's probably going to rain soon, but you don't know if it's going to be raining this time next week or next year or next month, whatever the case may be. That doesn't mean that you can't stay with positions longer term. I believe in riding your winners, and I take a hybrid approach. And the way I do that is I take short-term swing trade type of profits. In fact, I'm slotted as a swing trader, but sometimes we'll have positions that'll go as long as years, and real money is in the longer-term trends. And I believe you can have your cake and eat it too. And the way we do that is we allow our stops to slowly widen out. There's really big disadvantages of long-term trading, but that's where the money is. And I think that if you could take a hybrid approach with a short-term trade and have it turn into a longer-term trade, you end up sort of having your cake and eating it too. It's the best of both worlds, as I like to say. In fact, I have a report that's called The Best of Both Worlds. If you go to my website, DaveLandry.com, click on Store and click on Free Reports, you can download it instantly there. Okay, enough about me. Derek, let's go to you first. Based on any technical or fundamental indicators you want to use, would you predict that the S&P index will move higher or lower this week? And that's from Monday to Friday's close. I think, is the market closed? The market's closed on Friday, isn't it? Anybody know?
It's Good Friday.
Yeah, it's Good Friday. It should be closed. So I guess it should be Thursday, April 2nd.
Yeah,
you never know about the religious holidays. Usually those are always open.
Oh, really?
Yeah, well, somebody can let us know.
Yeah, I'll check too.
Let me get into this. I have also been a swing trader for the last 5 years since I started my software. It works very well with seasonality, and I continue to do that. We have morphed and done some other things too on some earnings plays, but let's say, to answer your question specifically, I can look at any stock. I can look at the NASDAQ or the Dow Jones, S&P, and I'll give you an example too on the NASDAQ. Let's look at it mathematically for the next 5 days, what's happened historically. So we actually line things up a little bit more unique. We line things up unique for this month, okay? And come April, we'll line things all over again. So I'll probably answer the question again come April 1st. But if I look at the next 5 days,
yeah.
Okay, I'm looking at 2004. It went down for the week 1.9%. 2013, it went down 13.3%. 2002, 2.86%. 2011, it went up 1, and 08, it went. In 2010, it went up 0.86%. So based on that pattern, if it's a general fund like that, the market from the open of Monday to the close of Friday is not upward bound. It is more flat to downward
All right,
bound.
we're going to narrow you down, though. Up or down this week?
Down.
Down. Okay, and based on that prediction, rate your confidence on a scale of 0 to 10, with 0 being no confidence and 10 being extremely confident.
I'll say that's a 7 because I am still looking to buy some calls, but they're going to be very specific,
Okay.
and I'll chat about one later on that I'm doing on CONN, C-O-N-N.
Okay. Sounds good. Market is definitely closed on Friday. I just double checked.
Yes.
Yeah, I looked that up too.
Yeah, so it's going to be the close of Thursday the 2nd for the remainder of the questions. Okay, Jim, let's go to you. Jim over at optionprofessor.com. Based on any technical or fundamental indicators you want to use, would you predict that the S&P 500 index will move higher or lower this week? And that's the close of Thursday, April 2nd. And once you give us your prediction, go ahead and give us a ranking of 0 to 10, with 0 being no confidence and 10 being extremely confident.
Okay, basically, one thing I wanted to say last time I was on there, you had made a very good point that the market had some problems with, say, the transportation average, but that the techs and the biotechs were keeping the market going pretty good. And that was very true until they did get hit a little bit. So, there's a few different things in the air here, but clearly that was very accurate that the market could rise despite the fact that the transports might be having trouble because of those two sectors. And then, of course, when they hit the biogens and they hit the Apple, then, of course, ultimately it did go back down a bit last week.
Yeah.
So, again, we're kind of in this quandary again. And so I'm not playing dodgeball with the question, but I think we all can say that this is a best guess type scenario.
Oh, I agree.
Yeah, we are in the middle of highs of 2120 and these lows of 2040, and they've done a good job of meandering back and forth and basically going nowhere. So this week we do have a situation today where we had a big jump because of many reasons, but this Chinese potential stimulus was very effective, and then the European business sentiment was quite much better than people thought. So, the bids are definitely coming out, and that's what's happening so far. I would guess that the market, if it did meander a little bit higher here in the next day or so, may see some type of selling at the end of the week. So I'd probably say possibly rolling over, because the transports, while they had a move up today, still have not gone anywhere near their highs of last November, which are 93.10. And so I'd say that by the end of the week we could roll over as people maybe take some profits before the unemployment report that comes out. And so I would say it'll close lower by the end of the week, but my confidence level on that is a 5.
Okay.
Maybe even a 4, because you're in a holiday week, and really it's going to probably come down to order flow. And if the orders come in on the buy side and there's no liquidity, these guys will raise the offer, and then they'll have people buy their stuff at a high price going into the holiday. And then next week, when everything's open, it could change quite a bit. But probably, we go today, maybe a little bit more tomorrow, and then possibly roll over.
Okay. Okay, you said 4 or 5. You want to go with 4.5?
Yeah,
or you want to?
No, let's go with 3. Let's go with 3.5 during a holiday week.
There you go. There you go. Okay. And my apologies if I get everybody confused, because Derek, I can see you, but everybody else doesn't have their webcam on, so it's the way the software works. Sometimes it's hard to figure out who's talking. So next up, I think it's Roy of SteadyTrader.com. Roy, based on any technical fundamental indicators you want to use, would you predict the S&P 500 index will move higher or lower this week? That's a close of Thursday the 2nd. And while you're at it, go ahead and give us a ranking of 0 to 10, with 0 being no confidence and 10 being extremely confident.
Right. Hey, let's realize, guys, if you give yourself a confidence of 4, that means you're actually giving the opposite prediction, right?
More than likely.
That's it.
I couldn't resist. But anyway, look, we've all seen. Look, this market, I call it the whipsaw. It just goes up one day, down the next. But it's going down according to my indicators. I know it's up a little bit today, but it's going down. So that's what I'm saying. I'm sticking with it, and I'll give it a 7.
Good. Okay.
And I do see. I see. Look, it's the end of the quarter. I see some sell-offs going on. And the pattern is, getting beyond the data. The pattern is every time the market goes up, people are taking the profits. I mean, especially the institutional guys, they're just taking the profits right out immediately. They're not waiting. They're just not waiting.
Gotcha.
And that's been the pattern all month. Even longer.
Well, I'm gonna be the contrarian here. My nickname in the industry is the trend-following moron. Years ago, I got that in the middle of the greatest bull market in history in 1999. There was a trader, and I'm pretty sure I know who he is. He's a famous trader, and he confused the issue with facts and said he couldn't believe the market was going higher, and he was fighting it. And I'd be willing to bet he was losing fortunes. And I got an anonymous email, but I'm pretty sure it was from him. And he said I was nothing but a trend-following moron because I was drawing these big arrows on the chart. Trend is not as clearly defined as it has been for a while, but I think in general the trend still remains up. So I'm going to go ahead with higher on that. To me, the S&P is not too far. In fact, I'll just do a quick measurement here. S&P is about 1.33% away from all-time highs right now, and obviously we're having a good day so far. Russell 2000 is one of my favorite indices to watch because I tend to trade more inefficient and smaller cap stocks, and I'll do a measurement real quick on that. I think we're about 1% away from, we're less than 1% away from all-time highs. So what I've been writing in my column is, in newsletter, is that I think it's going to be hard for us to have a bear market as long as that Russell is at or near new highs. Now, obviously, things changed quick. We had a little spill last week. Now, what I find kind of fascinating is, and I do avoid all news, and I'm a pure technical trader, but I do a little inter-market analysis here and there, and I evidently, not evidently, but every now and then I'll get a little news from osmosis, usually during these shows. And it seems like there was a bit of a rate worry last week that caused a sell-off, and now it's kind of fascinating. I haven't checked them yet today, but the bonds are now higher than they were before we had that sell-off. So I find that kind of interesting that has already worked. The actual event has already worked its way through the system. So I'm going to go higher, and I'm going to give myself a confidence of about 7 on that one. And it's great because like a lot of times we're all pointing the same way in here, and that makes me kind of nervous. But I like the fact that I'm going against you guys, so that'll be interesting to see. The other thing that I find kind of fascinating is that every time this market goes to sell off, my inbox is filled with all these naysayers, and as I wrote in today's column, like the Chicken Littles, like it's the end of the world, and that this is the quote-unquote the top, and it just seems to go back to make new highs. And I know one of these times it won't, but so far it just continues to climb that wall of worry. So I'm going to stick on the long side for now and take that dumb approach and just draw my arrows for now. Okay, let's go to the next question.
Guys?
Yeah.
To Roy's comment, I was going to say we've discussed this a few times before, but a lot of people seem to misinterpret that confidence question. So the question is actually rate your confidence in your answer to number 2 on a scale of 0 to 10. So if you say 0, then that's a 50-50. You have no confidence either way. So that's a 50-50 percentage. Whereas, if you say a 2, then that's a 60%. Okay. It was originally, and Dave, you and I have discussed this before, so you remember that, right?
Yeah, I like the way, and I like when you, and maybe we'll chew on this a little bit more, but like how many shares would you buy between 100 and 1,000 or something like that? Yeah, maybe that might be a better ranking or something.
Yeah, it was originally a betting question where people were asked to bet $0 to $100. But at some point I changed it to this confidence question. So. But I'm thinking that's a lot of people misinterpret, I guess, with what I was trying to say there. So I might change it back to a betting question. So if anyone has any feedback about that,
Dave, I'll give you feedback right now. This is Derek. I completely understand it. I'm glad you explained it to me. So from 0 to 10, 5 is not the middle of the teeter-totter. 0 really is. So I understand it now, and I can make my comments appropriately now. That's fine.
Okay. Does anybody want to change their ranking based on that?
Yeah. If a 0 is 50%, then I'll downgrade my 7 to a 4.
Okay. Is that who was speaking? That's that
Roy?
Roy?
That's Roy. Yeah.
All right.
Yeah. Well, thanks for the explanation, Dave. I was obviously.
I had you down as a 6 anyway, so okay. All right. Okay. Let's go to the next question. Let's go to you, Derek, first. What developing events, and they could be technical or fundamental, would you be watching out for this week that might have a positive or a negative impact on the S&P 500 and other U.S. markets?
Well, I have one thing that I'm focusing specifically, but it won't affect the entire market. I am looking at an earnings play specifically on CONN, C-O-N-N. And if I look at CONN, I'm not answering the question quite properly, but let me proceed because I think it might be beneficial to the audience. The earnings play for CONN is coming out before the market tomorrow morning. So anybody who wants to do something tonight, this afternoon, or tomorrow morning. But if I looked at it technically, I see on this particular quarter, over the last 5 years, it's gone up significantly. Like last year, 13%, 8%, 15%, went down in 2011, 7%, then it went up again in 2010. I also see what is the most interesting feature about it is after the option comes out, so tomorrow morning, from that point on, it doesn't matter if CONN went up or down, it usually goes up, but for the next 10 days, it goes up significantly. So we are going to be doing a little webinar to discuss tomorrow morning to get it into CONN. We may do a credit spread. I notice Mr. Option Professor who likes to do some credit spreads. We'll probably do a bull put credit spread on CONN this afternoon. I think it's around $29. We might do a $29.28. How that has an impact on the market, that specific one earnings may not affect it. I'd have to do some further research. I'll see if I can do the next couple of minutes while the other guys go ahead and continue to speak.
Okay. Okay. Yeah, that one looks like it trades in big chunks. Not my looks like before 2014, it looked like it was a pretty good trend play, and I see my charts all marked up. So we might have been playing it back in 2012. But yeah, it's just started traded in these big chunks, and looks like it makes a big chunk on earnings, and then it just chops around. So that'd be interesting. That would be an interesting play. I'd be interested to see how that shakes out. Maybe if you come back on sometime, you could let us know how it all worked out. I think it'd be kind of fascinating. Jim, let's go to you next. Based on, what developing events, and they can be technical or fundamental, will you be watching out for this week that might have a positive or negative impact on the S&P 500 and other U.S. markets?
Right. I just wanted to ask one question on that CONNs, because I don't follow that particular stock, but I noticed that the short interest is 35.83%, which is a relatively high short interest. Does that come into play at all as far as...
Yeah, what we do is we're watching the implied volatility on it, and it's just percolating with implied volatility. Anytime that we get that much implied volatility, such as like a Netflix or a Priceline, it's going to be over 100. I think this morning it was right 113%.
Wow.
When that happens, we're going to be sellers. Hence, we're going to do a credit spread on it, and we're just going to gobble up all that premium, even if it goes nowhere. So if it's at 20, let's say 29 and a quarter when it closes, so right before we close, we may do like a 29.28, and if it doesn't move anywhere, or if it moves just slightly down, or if it goes in our favor, we win in all three scenarios. And right now, this morning, it's more than a 1-for-1. So if you invest $1,000, you're making like $1,200. So when you're doing a credit spread, that's a lot of implied volatility.
Wow.
Yeah. Because I would think with the drop from 80 down to 20, plus the short interest up near 40%, the volatilities might be kind of high. All right, getting back to your question, what's going to be happening here with news and events coming up? We do have, like I say, some feeling that the People's Bank of China might do some stimulus. That's obviously very big news for that area. And then, of course, the European confidence being higher and factoring a 1.5% GDP growth rate, which is, I guess, higher than what people were thinking. There seems to be, and then the home sales, I guess, were at some kind of a high level. So the news seems to be rather positive. Now, if we finish this week up with a very great unemployment report, I think that's going to possibly have an effect on the bond market. And some people think that a real positive report, because it could transfer into a good consumer spending feeling, and 2/3 of the economy is the consumer spending. The vibe could be quite positive. And that note of the Russell being so firm, with that being a wider lens with 2,000 stocks, I think that's pretty significant as well. So it is kind of hard to get this guy down here, pretty much. So, as I look to the not too distant future, this 2120 area, if it can hold and it rolls under 2040, you might have something cooking there. Those guys who watch options, 17 is a high point on the VIX from last week. If you blew out 17 on the VIX, then getting prepared for a more significant drop would make a lot of sense to me. But this meandering thing can also last a lot longer than you think. On a wider lens, I did want to bring out, as I have in the past, that my wider lens is looking for a range this year of 2250 best case on the upside, which would be a 40% jump on the S&P above the 2008 high of around 1600. And on the downside, those October lows at 1830. So that's a 400-point range for the market to operate within. And we're not, we're pretty much smack in the middle. So that's why this figuring out which way it's going to go is not the easiest racket in the world. And so basically, the news events that I think would be is, will the People's Bank of China come out and do anything specific? And will these stock markets in Europe continue to get a strong bid? And then, of course, will the consumer be looking like he's going to be spending good money in the second half of the year? And will they start discounting a much more robust economy here in the U.S.? And then, like I say, the only offsetting penalty that I see here is those transportation averages certainly are anemic at best right now still.
Yeah.
And I'm still a believer that on a bigger picture, that might be telling us more than we're willing to admit right now. So, you do have cross currents going on, but like I say, the news right this second, this week, certainly is coming out on the positive side of the ledger.
Yeah, I try not to get too caught up in the transport and everything, but in this business, you have to watch everything, and I often talk about intermarket technical analysis. It really only matters when it matters. So you have to look at the dollar, you have to look at gold, you have to look at everything out there, then see how it's all unfolding. Roy, I think we need to. I think you're next up on this one. What developing events, and they can be technical, fundamental, will you be watching out for this week that might have a positive or negative impact? On the S&P 500 and other U.S. markets?
Yeah, one of the technicals that I'm watching, and it's part of the basis of my prediction, is the simple old 2-period RSI, and it's nudging 83 this morning, and the last time it was near this high was March 20th, when we have 5 down days after that. So it's that 2-period RSI is just getting a little high. That's and as it gets higher, more and more obviously the S&P could go down. As far as we're also doing news now too, because I think you guys were talking about news. I think the rabbit is the Saudi, Yemen, Iran, Iraq war, because that story hasn't really hit the American consciousness yet. But I mean, that's huge. That's Yemen. That's the Strait of Hormuz. That's oil, and we just don't know what's going to happen there. I mean, that's just complete wild card. But that may actually percolate into the mass media this week in a big way, depending on who bombs who and what goes on there. So
I have a question about that on the oil.
Yeah.
The question is there going to be an agreement, or if there's not? And some people are thinking that if there's not an agreement, then that doesn't irk off Israel, and if Israel is complacent, then things are postponed. So agreement or no agreement, is there a preference for you?
Oh, you're talking about the Iran nuclear treaty.
Yeah.
Yeah, well, I don't know. My personal opinion is they're going to punt it like they always do. And we'll just be waiting because I just don't see any kind of agreement being drawn up before the holidays. Beyond that, it's hard to interpret. It's really hard to interpret how the markets are going to react to that.
Yeah.
But
So
the oil thing is real. I mean, that's real. Yemen does guard the Straits of Hormuz, and we're in there heavy, and the Saudis are in there heavy. I mean, this is a military action like we haven't seen in a long time. And these things kind of affect the market in a big way.
You guys are bumming me out. I try to avoid the news, and now I'm going to be all depressed this afternoon. Okay, I am a technical guy, and so I'm just looking at the charts. The dollar's on its way back up, which is kind of interesting. It had a pretty deep pullback, a little deeper than I would like to trade. But the longer-term trend so far is still up there. There is a bubble in the dollar. And I love bubbles because bubbles go a lot further and last a lot longer than people are willing to admit, but they usually end badly. And when that does begin to end, I think we're going to see, obviously, the intermarket technical relationships come back in a big way. We'll see oil go significantly higher. I'm not sure exactly what impact it'll have on stocks, but I'm sure there'll be eventually some sort of impact there. But I'm not going to worry about that until it happens. Like I said, the S&P 500 not that far away from all-time highs, back above the 50-day moving average today. My only concern there is we are stuck in a range, and as of this morning, before the open at least, or I should say Friday's close, we were where we were way back in November. Now, a couple of more big up days like we have today, and we'll be back to new highs, and then all will be good in the world, at least temporarily. And I believe in taking things one day at a time, and I'm looking at the Russell now. The Russell's now up 1.5% today, so it's just about 0.75% away from all-time high. So as long as that's continuing to chug along, I'm not going to worry too much about things. I have open long positions. I've taken partial profits on all of them now, and I have stops in place. And on new positions, I'm going to wait for entries. So if the market does roll back over, then I won't get triggered in, and no capital is put into harm's way. But so far, so good. The market, again, just kind of keeps eventually it won't go back to new highs. And when that happens, I'll be a little late getting out, and I'll be a little late to start shorting. And I realize that since 2009, on every sell-off, we turn around and go right back up. In fact, I've got caught up in a few of those sell-offs and actually started shorting some of them. And that's what you do as a good little trend follower. When things begin to turn against you, you allow your stops to get taken out, and then you start taking signals the other way. But so yeah, it's going to end badly someday. I mean, my brother came up to me at Thanksgiving and said, "Oh, I've doubled my money since 2009 in my 401k." So I'm like, "Oh, geez, that's a nail in the coffin for a market if I've ever heard one." So I'm a little, since then I think that the clock has started ticking. But as long as it goes higher, like I said, a lot of times trends in the markets go a lot further than people are willing to believe. So that's what I'm watching out for this week. Okay, we have an open-ended question. Okay, let's go back to you, Derek, and this is the open-ended question, or the general question of the week. What sectors / industries are you most excited about for long-term market growth, and why? Derek, you're up. Can you hear us? Okay, we'll go to Jim. Come back to you, Derek. Jim, what sectors / industries are you most excited about for long-term market growth, and why?
Well, I think one sector, and again, this is just a guess, but the one sector you might want to take a look at is one that's out of favor right now, which would be your energy, right? If you're a guy who's looking at 107 as a high point on oil, and then it drops 60%, that puts you into the low 40s, which has basically been the lows. And, the idea that it may go back up, as somebody was suggesting, and I've been reading some of the larger analysts on this are thinking that the median price of around 65 or 70, might make some sense. Then sniffing around something, that used to be quite high on some of these energy sectors, obviously people are starting to do that. That might be a sector to take a look at because, a lot of people do like to buy things that are on sale, and you'd have to say that the energy sector is on sale. So if I had to zero in on one, that might be reasonable to take a shot at as far as looking into it would be energy, would be a sector right off the bat. What other parts of that question was going on?
What sectors, industries are you most excited about for long-term market growth, and why?
Yeah. Again, if I had to pick one, that would be the one. And also, a lot of the companies in that sector pay pretty darn good dividends. So, A, you're buying it at a discounted price. B, you're getting paid to watch the movie, and hope the movie goes from Godzilla to Mary Had a Little Lamb over the long term. How's that for a joke? Is that a good joke?
Yeah, I wouldn't expect that.
I got humor. I hide it in my drawer here. I got humor.
Yeah, Mary had a little lamb and some potato salad. Derek, are you back with us yet? I think Derek left us. I don't know what we said to. I don't know what we said to offend him, but if you can't stand the heat, get out of the kitchen. No, Derek, it's probably just probably a squirrel got his nuts caught in a wire between us and Derek, and so that's why he's coming. Hopefully, he'll come back on soon.
Looks like
he's logging back in. Good. Technology is wonderful when it works. But yeah, I noticed my little feed is running slow today too for some reason. I don't. Does that have anything to do with this? What do you call it? That internet Obamacare for the internet that everybody's complaining about?
Net neutrality.
Net neutrality.
Yeah, the FTC or FCC maybe came out with their rules a few weeks ago that net neutrality is going to stay in place, and the providers have to abide by it. But I did see that there were some Republican senator, I think, trying to pass a law to get around that or something. But as of right now, the rules are still in place.
Yeah, and I don't know if it's just my own equipment here or whatever. I got 2 DSL lines, but it just seems like things have been slower lately. I don't know why. Maybe it's my equipment. Let's see.
I'm back, by the way, Dave. Thanks.
Oh, okay. Is that Derek?
Yeah, Obama's was monitoring. Yeah, they had the FCC monitoring my my new office right here.
Yeah, so, you got kicked out, huh?
Yeah. Do you guys have any particular sectors that were of more emphasis? I've been looking at the retail sector, but
Jim talked about the energies, and I'm going to probably plus one and dovetail in on that. But that's pretty much all we discussed for now. So, Derek, what sectors or industries are you most excited about for long-term market growth, and why?
Well, over the last 4 weeks, we've been following the retail sector, and I can give you guys the different stocks that we were looking at, and we do some things on earnings play too, but we've been 11-1 in our predictions on the earnings plays in that particular sector. So there's something that's going on there. The fast food restaurants, we looked at Jack, we looked at Red Robin, some various other ones that we're looking at too. So we thought that maybe, which ties in with the oil industry, especially for the last quarter, when the oil prices went down, that affected gasoline prices at the pump. And if a family of 4 has an extra $100, what's their immediate way to celebrate? And we thought they were going to the fast food restaurants.
Well, Red Robin now has unlimited fries when you buy a burger, so I can hear me getting fatter based on that. Okay, let's see. I think Roy's the only one left to opine on these matters. Roy, what sectors and industries are you most excited about for long-term market growth, and why?
Well, I can attest. I've already done very well with fast food in the last 2 months. I don't know how long that's going to continue, but no, I've been trading it and doing very well in it. It's been terrific. I don't know how long it will continue. Long term. Look, biotech, because that's an industry that America dominates, and we will dominate for a long time. So biotech, and I also agree with the earlier comment about oil. I mean, this what do you call it? It's not a bubble. It's the opposite of a bubble. These low prices will not last, and if you look in long term, oil is going to go up. It just will go up.
Yeah,
long term, yeah. You want to buy some at the bottom, sure. But anyway, yeah, biotech and oil for the long term.
Yeah, amen. I've always been a biotech bug, so to speak, if that's a word or a terminology. I just let the market tell me where to go. And right now, there's a bull market in IPOs, and it's gotten kind of interesting. In 2013, you can kind of throw a dart at them, and somewhat in a lot of 2014. And now what's kind of cool is there's, I call it the fly and I call it the die. Some of them are flying and some of them are dying, and the demarcation between the two has really increased. So they come public and they just die. And the old Will Rogers, buy stocks that go up. If they don't go up, don't buy them, is really working. And I'm not a breakout trader, but I have some breakout patterns that I've been using in these IPOs, and it's just been phenomenal. And you know, knock on wood, let's hope it continues on. But yeah, biotechs are really hot within those bios. We're long a stock called Ruby, and I actually had to look it up the other day because it's doing so well. The curiosity got the best of me because it said software. And it looks like they're buying and selling ads or something. Kind of like it's a little scary. It's kind of like an Enron of the ad markets, but so far looks like they're doing pretty good with that. So whatever the market tells me is what I'm going to be buying. Years ago, a friend of mine joked that he said that if I heard that intravenous drug use was going up, I would be buying hypodermic needles. And I'm not that bad, but drug use isn't going up, right? Anyways, I think there's a lot of excitement, obviously, in the biotechs. I like what Roy said. We dominate in that area. And what's kind of interesting nowadays is that, like the semiconductors, I don't think you could call a stock just a semiconductor anymore, because they're a semiconductor for alternate energy or for solar, or so it's all kind of getting mixed up, and the technology is very exciting and moving very fast. The beauty of the IPOs, again, and I'm really hot and excited about the IPOs because they've been doing so well lately. I did a course on them last summer, and so far everything has really worked out nicely since, knock on wood again. But the excitement there is, I call it the promise of the future, because a lot of times they just go straight up and then they implode. So you do have to have money management if you're going to ride some of these new trends, and every now and then, hopefully, some of these trends will materialize and last longer. So semiconductors, always a fan of semis. And again, they could be in any industry. They could be in solars, alternative energies, or whatever. Biotech, big fan of biotech. And then biotech takes different avenues and all. And then plus one with both Jim and Roy on the energies. I don't know if Derek mentions the energies too. But I have a pattern I call the bow tie. And it's just when three moving averages come together over a short period of time and they spread out again. And usually it won't catch every bottom, but every bottom will have that pattern or some other emerging trend pattern. So I'm watching for that pattern to happen. We took a stab at the energies and gold too, for that matter, earlier this year, and we failed miserably. But I think if they set up again, I think it'll be worth a shot. And I fully agree with you guys as far as energies being beaten up. And we're still hooked on oil. Oil's not going away anytime soon. In fact, I need to go fill up today. So, you know, I'm going to go fill up my truck in a little while.
Dave,
Yeah.
I got one additional comment on that one.
Sure.
How we will look at the sectors. So let's say you have confidence in, let's say, the healthcare sector, Obamacare, yes, whatever is going to take place.
Yeah.
So what we'll do is we'll do a scan for all the stocks that are in that sector. And one of the scans that we'll do is to find out stocks that are currently going up in the last month.
Okay.
So one of the ones that came up on our scan was CNC, which is a Centene Group. And we did this about 2 months ago. We got into it. We got into it again a month ago, and we also did a webinar this morning to get into it. Actually, on Thursday. On Thursday, we see if you look at the charts on CNC, you'll see a great big hammer time candlestick on it.
Yeah, I call it a trend knockout. But yeah, I hear you. It's also a candle pattern.
We do a what we call a magenta channel. So what we're looking to find is on a stock that's going linear to see if there's any overboughts and oversolds. But that channel is going up over the last month at an annualized growth rate of 150%.
Yeah.
So if it continues at this pace for the next 12 months, the stock will be, 70, it's going to be 150% higher than it is today. Obviously, it won't go like that for 12 months, but I'm just worried about the next month. So if it goes like that. So we do a scan for all those stocks in that sector, and why buy stocks that are growing 2 or 3% when you can find one that's growing by the month at 12%?
Amen. Amen. I look at it's kind of interesting. It's like we're probably doing the same thing, but we get there different ways. I have a pattern I call persistent pullbacks, and I'm looking for persistency in the market. A market like this CNC that goes up day after day after day, and then I'm looking for a pattern to get in. And you call it a hammer, I call it a trend knockout, where it kind of gives a little shakeout, kind of shakes the tree, knocks out the nervous longs, the Johnny-come-latelys. It also sucks in some shorts, and then that kind of clears the way for it to go higher. So I'd be interested in talking with you further about ways of identifying persistency. I mean, I'm just looking at thousands of charts every day because I enjoy looking at charts, and then if I see quite a few healthcare or biotechs setting up, then I'll go dig a little further in the sector. And one other thing we should probably talk about a little bit more is you kind of hinted at delta relative strength, and I'm a big fan of that, and I think that's something that is a wonderful area for research. And again, I'm doing this empirically, but I'm curious, have you done anything with delta relative strength, meaning the change in relative strength, whether it's getting increasing or decreasing?
Well, here's how we approach it, because we also have we're approaching it from the vantage point of historical volatility. So if I were to look at a stock over the last current trend, right? Let's say it's the last 30 days, and I see, like on Centene, that it's growing at a rate of around 12% a month. Okay? I will look at that, and I'll look over the last 10 years, and I'll see, you know what? It also has grown at an average of 12% a month. So why get into a stock if it hasn't done it in the past? Why get into it? So if I just imagine that line going up at 12%, and I can kind of draw a bell curve 30 days from now with the pinnacle, the most likely scenario of where that stock is going to be, 20 days from now, 20 trading days from now, is going to be 12% higher. And I actually draw a bell curve there. Now, if you draw a bell curve today around what people think the price is going to be, it's going to be at the money, at a 0.5 delta. Right?
Yeah.
So what we try to do, if you try to imagine those two bell curves, one of them is at today's price, which is around 69.70, and then ours, which is 12% higher, we think it's going to be around 77, okay, or let's say 80. So we try to take advantage of that. So if we have a high probability that it's going to get in and go to 80, we can adjust our call or our short-term buying. So that is the most likely scenario. So what happens is our delta right there is very low. It might be a 0.3 or whatever. Everybody's buying at a 0.5, and I'm trying to take advantage and buy 10 times. And I don't go 5, 10 strikes out. I might go 1 or 2 strikes out, and anything more than that's gravy. But our whole concept, and this is an important concept, if I have a high probability of success that I can get one with a very low delta of 0.3, everybody's buying at 0.5, I'm buying 10 contracts to their 2 or 3, I'm going to make an enormous success. So I take a lot of hard work to try to find a good stock, and I want to be rewarded for it as well too. Go ahead.
Well, amen. I mean, that's a huge gamma play on that, and if that gamma kicks in, I mean, you're going to be huge. And I guess your risk is, if you're just long only, your risk is obviously limited. No, this is all fascinating stuff. One thing I wanted to ask you is, you mentioned historical volatility, and one of the anomalies I've found with historical volatilities, even in a company like this that's growing like this, if you have persistency in the market, that historical volatility tends to drop off. So how does persistency affect your research when it comes to using historical volatility engaged in these stocks?
We believe not all stocks, but certain stocks move on certain times of the year. If you look at Apple, there's 3 different times, but when Apple moves most is in October 10th, okay, on the of October 10th, more than Christmas, more than the start of school. And why is that? And I actually called up Apple, and that's so many days before Christmas when they launch their commercials, and they also have a product launch. And so when they see the commercials in the air, on the TV, they may not buy the product, but just, oh my God, that's a fantastic product, I'm going to get it. So we believe in seasonality. So what we'll do is, if we see, and we have a screener for this, if we see a stock that in the upcoming 30 days it's 10 for 10. It's gone up 10 years in a row and an average of 10%. That alerts us to something's going on. Then we'll look at it to see, you know what, has the market started turning upwards? Because it haven't done it in the past, it hasn't done it. So we do a step-by-step all the way to candlestick confirmation in order to get in. But how we look at it, we're going to look at the last 10 years to see if it makes sense, and then we'll look at the last current trend. And the current trend may be 10 days, well, 20 days, it might be 50 days. But if the current trend, where it's going linear over the past so many days, if that if that also is the same as what we're predicting, then I don't need it to change any direction for me to make money. It's already moving in the right direction, which I predicted, at the same rate. So I'm taking very little risk. So if I can get a 0.3 delta at very little risk, the way we look at historical data, hey, I'm all for it, because I don't mind making. Oh, we did it on BIG. You know, in January we did a webinar predicting BIG was going to go up, and that was a 7 times investment for us, and it was a simple play.
I got a question. This is Jim talking. I had a question on the CNC, which you seem to have done some homework on. The volume, if I could chime in with a question, is okay?
Yeah, absolutely. Come on.
Okay. On CNC, because I'm watching the options on it, the volume on a 50-day average basis versus a 200-day average basis seems to be lightening up to the tune of about 30% lighter on a 50-day versus a 200-day. And the 200-day average down at 47 means we're about 50% higher than the 200-day. Yet I'm looking at the options, like a buck out of the money or so for April's are only going for about $1.20 according to the screen, and $1 higher is only going for $1.15. And it seems weird in that with the volatility that that stock has had, and with still a couple of weeks and change to go on the Aprils, that those options would be that skinny on a stock that's been that volatile. So I was wondering if you had any thoughts on, you know, is it, have they made an announcement or something where it's going to be fairly stable up here or something?
Yeah, we've been following it, and we've been following it since the last earnings play back at the beginning week of February. And we also recommended getting into it again back last Thursday. Now, the fundamental news, you know, they're buying companies overseas. Their Florida operations is going gangbusters. You know, they're awarded certain contracts for certain states, and they have cash on hand where they're trying to buy up. Not only gain market share in their existing companies, but they're trying to go ahead and do some other purchases as well too. So they're in an industry that Obamacare is going to be here, you know, for the next couple of years. I only care for the next month or two. Right?
Yeah.
And I show historically that April makes sense, but I don't want to go any further out because I'm going against it. It starts going flat after that. So I'm only looking at April contracts.
But I'm just saying, on this particular thing, we've gone from 65 up to 71, which is like a 10% move in the stock. Yet these options seem to be priced as if it's on cement. In other words, a $1 premium with 2.5 weeks to go on something that just jumped up 10% is weird. You know what I mean? In other words, you would think the implied volatility would be higher on that. I just wonder if there's any explanation, or it's just maybe it's not that active an option to begin with.
Yeah, it's been going up for some time. Maybe they're just used to it because heck, back in October it was back, you know, down in, you know, around 68, 77 or something like that.
Yeah.
Before the split, and they
split. The volatility doesn't seem to be showing itself in the term of the options. You know.
Yeah.
Listen, things can always happen. There's anomalies happening every day.
Yeah.
Well, it's the persistency from what I've seen really makes that HV drop, and I'm not an options expert, even though I was part of a fund for about 14 years that traded options, but that doesn't make me an expert. But when you have a stock that's so persistent, that HV drops down really low, and I'm wondering if that HV has something to do with the implied or the relationship between the HV and the implieds, and I'm just tossing that out to whoever wants to take it between you two.
I'll make one comment on it. When you look at historical volatility, I want to open some eyes up on this one. The current trend, historical volatility, is the most weighted volatility that I use. Okay, you can look at some numbers that they'll look at over the last year, 6 months, or whatever it is. But what do you think it's going to do based on history? So if I'm looking at a 10-year history, the most current year, 2014, has more weight to it than 2005. Also, a current trend in my definition is a minimum of 20 days, because you really need 20 to 30 days worth of information to get a bell curve. But let's say the current trend goes 30 days or longer. Those 30 days where it's gone linear in one direction, and you can see the growth rate of that last 30 days, that to me, that historical volatility gives me much more weight of what it's going to do in the near future. So I can look at numbers that they've thrown out as far as HV goes, and I really kind of throw them out and redo it based on, one is the current trend, and then I look at the last 10 years and I do a weighted average pattern to see, was it down a couple years in '07 and '08? Is it slowly rising now? So I can kind of take a look at it of a 20-day time period from today's date on. So HV is not HV is probably the best way I can answer that one. Sorry to get off track of there a little bit.
No, this is good. This is good. In fact, you've got me. I was while you were talking, I was plotting the HV and checking it out, and it's something that I've been looking at HV as only an indicator to me to know. Okay, I like to trade these high HV stocks. For instance, we're long TRIL, which has an HV of 70 right now, and it's up about 8% today alone. So I mean, that's the kind of stocks I love to trade. I'm not as excited about a healthcare stock, but if it's going to go up 12% a month, like you pointed out, maybe I need to reevaluate that and take a look at those persistent stocks, like I said, that have the lower HV. And maybe I need to pay attention to direction of HV and as opposed to just the absolute reading. So this is I always learn something in these shows, and it always amazes me that I think that the people out there probably don't even realize what they're getting in the shows. Not to be vain, but there's always so much good information that comes up. But anyway, I think we could probably talk for hours on all this. We probably need to start wrapping things up. Sounds like we all made some new friends here. So that's the problem with the show, is there's not enough controversy. Somebody was complaining a while back. We only have a few minutes left. So, Derek, just in a minute or so, anything else you want to tell us about your trading or Magenta Trading? MagentaTrader.com.
Yeah, I've actually just redone my whole software, and I've changed it all to cloud, so it's all HTML5, and I've been pretty busy doing that stuff. But what I've done for our audience is I try to keep them updated, and I have a webinar that I'll make free for tomorrow. It is, and I've got a second site, MagentaTrader.com or cloud.magentatrader.com. I actually just changed servers, so hence I've got both of those. Will work fine, cloud. But you'll see on the webinars that I'll have one tomorrow morning at 9 o'clock, and we're going to be discussing the historical volatility in more detail, and I'll throw the charts up. And one of the things that I think is going to be very interesting is on Con, where it goes up after the report goes. So it will probably go up and a confidence scale like a 7 on David's confidence scale. That'll probably go up for earnings. So if you want to do a credit spread, that's fine. But what we're really interested in is getting into it tomorrow morning after the report, because for the next 2 weeks we think it's going to go up significantly. It's done so for the last 8 years, no matter if the earnings goes up or down. But it's just cloud.magentatrader.com. It's 9 o'clock Eastern time. I'm hosting it. It's a go to my webinar, and we never charge for that webinar.
Cool. Okay, Jim. Any closing thoughts or anything else you want to tell us about OptionProfessor.com?
Yeah. On the OptionProfessor.com, again, you can go to the website and you can take a look at the DVDs. Again, options are not right for everybody, but to find out what strategies might be right for you, first thing is to learn about them. And of course, I've been doing the seminars coast to coast now for over 25 years, so I have some experience educating investors on the uses and risks of options. And as far as one of the areas of hedging, you know, the higher and higher and higher we go, and the closer we get to the end of the Obama administration, the concept of married puts, collars, and other tactics that might offset some of the exposure you might have to some of these stocks that you might own or strategies you might have, it might be helpful to learn some of the hedging tactics that are available with the options. So again, I think the timing of learning about options is right here, and the timing of using some of the hedging tactics in the next 18 months might become very interesting, particularly if we have one more advanced towards that 2250 area and we get closer to the end of the Obama run. It could be interesting to know, how to hedge yourself and other strategies as well. So again, invited always to go to the website, learn more about it, and of course, lots of great information out there.
Okay, good stuff. Looks like Roy might have dropped off again, thanks to net neutrality. But if he comes back on, we'll certainly let him wrap things up.
He had to go on to another appointment that he had.
Oh, okay. No worries. Yeah, I'm about ready to go on to lunch. Just real quick, Dave at DaveLandry.com. If you have any questions or email, if you do go to my website, DaveLandry.com, a couple things. Like I said earlier, click on store, click on free reports. I've got a 21-page report that's going to give you the crux of this methodology, and it's I've been having a lot of good feedback on that, so check that out. Also, if you want to join me, I guess David Cosby will be kind enough to have me back. If you want to join me here next week, click on my website on the, if you're watching this on YouTube, there's a countdown for this show. There's also a countdown for a webinar that I'm doing on Thursday. It's called Dave Landry's The Week in Charts, and it's about an hour and a half. I talk for a little while about the markets, about some technical things, such as persistency and trend knockouts and some things I mentioned earlier, bow ties and such. And then we open it up for questions to everyone, questions on trading and questions on individual stocks. And we have a lot of fun. We don't take ourselves too seriously, and that webinar is free. So just sign up on my website for that. Okay, David. Looks like we had a pretty long and interesting show, at least from where I sit. So let me let you go ahead and wrap things up.
Good. Yeah. Good discussion. Thanks, guys. So I just want to remind everyone, you can go to TimingResearch.com / reports to download the most recent or all past reports. You can also go to TimingResearch.com / current survey sometime before next Sunday afternoon to fill out this week's survey. And I just want to thank my guest, Derek Pilger of MagentaTrader.com. Thank you for being on this for the first time, this show. Roy Swanson of SteadyTrader.com, Jim Kenny of OptionProfessor.com, and of course Dave Landry of DaveLandry.com. Thanks for hosting again.
Thank you.
So, all right.
Thanks.
Thank you, David. Thank you, everybody.
I enjoyed.
Thanks, guys.